Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Well, hello. Good morning, everybody. Thanks for jumping on the Wealth Coffee Chat this morning. Monday, the 3rd of February, folks. January is already in the rear vision mirror. The year is off to a cracking start. For some of us, January is a bit of a slow month. Maybe some of you guys out there, you're already been cracking into it, but really for the world of real estate, January is a bit slow, but I tell you what, folks, we're looking to get it going in February. So welcome along. Great to have you here this morning, wherever you are, wherever you're dialing in from Wealth Coffee Chats. Give us a bit of a shout out in the chat. Say hello. If you didn't already know, most of you know this though, but Jason Witten is my name. Been hosting Wealth Coffee Chats for many years now. It started in COVID when we all went digital, a way to keep connected with you guys, talk about the world of property, investing, and so on, daily keeping us on track, making sure that we didn't get too freaked out or waylaid by the media madness and other opinions that really don't care about you being successful in your property investing portfolio journey. And we've stuck around, and so have you. So welcome. Great to have you here. Awesome to have you in this morning. We've got a guest in a little bit, so make sure you hang around for that. But a quick hello and shout out to a few of the early birds. Good to see you, Kevin. Thanks for joining. As always, Bunty's in the house. Alison, good morning. Hope you're well, all the way from the Northern Territory. Are you still up there in the NT, Alison? Hopefully everything's going well and things are going great. Josh is in the house as well. Yes, Josh. We have got the exit strategy going. If you want to get involved, Josh, give us a shout out. We've got an event in Melbourne for exit strategy planning people. It's coming up in March, the first couple of, I think it's the 6th to the 9th or the 7th to the 8th, depending on how you're going, Josh. But if you're up for it, give us a shout, mate. Love to have you there. Hope you're well. Either way, Jeff, regular. Good to see you, mate. Yeah, hope you're okay up there, Scott. A lot of rain there in Townsville, isn't there, or North Queensland? But it is the season for that sort of stuff. But listen, folks, this morning wanted to talk about something that's probably on most of our minds as property investors. 2025, where to now? Where are we expecting the property market to go? What's going on in the economy? What information should I listen to? What information should I ignore? Good questions. Many of us in the past, if you've not been hanging around with us for too long, may have taken the opinion or offered rhetoric of ill-informed, fear-mongering sources that might not be good for your property portfolio. But folks, over the last 7 to 10 years, we've been bringing on the right people to you to listen to for the ideas of where things are going to go, people who are specialists in their field. And this morning is going to be a treat for us all. We're going to talk about where to for 2025. 24 had an interesting time of it. 25, where are we going? What are we going to do? Listen, I'm just going to cut to the chase and bring the experts in to ask them. They're probably going to give us a little bit of an idea this morning and tell us what might be happening tonight as well. So I'd love to welcome Dr. Andrew to the Morning Wealth Coffee Chat. Morning, Dr. Andrew. Great to have you here.
Yeah, good day, Jason. And I should say Happy New Year, but it sounds a little bit stale, doesn't it? Here we are.
It feels like it's often, it's off and running, and But what do they say? They say the older you get, the faster time moves, or is that just me? I'm thinking that way. But anyway, great to have you here this morning. What's going to happen in the property market in 2025? That's what I'd love to maybe hear a few little tidbits this morning. We're going to hang out tonight for an hour and a half. You're going to come to our coaching and mentoring program and give the full debrief to our clients. But this morning, for everyone listening in for maybe the next 10 minutes, what have we got in store for this year, Dr. Andrew, or maybe the next 6 months? And, you know, what happened in 2024 that we need to be aware of too?
Yeah, look, Jason, you were spot on when you mentioned the narrative that we continually get, particularly this time of the year, regarding doom and gloom. We've had so much, we get so much doom and gloom. Of course, it's a very special headline. I think it's called clickbait. But just imagine if you had have acted on a lot of those negative headlines that we've had over the past decade or more, you'd really be up the creek without a paddle, wouldn't you? Because,
you would.
Because the Australian housing markets keep on keeping on, you know, and that was the story of last year. Of course, 2023 was a rebound year following higher interest rates in 2022. That confounded a lot of the doomsayers. And last year was a consolidating year because, again, we saw quite solid growth. House prices, national capital city house prices were up around about 8% on the rebound in 2023. And then they matched that with another 7% last year. So onwards and upwards. And the story from last year was clearly what we call the big three. And the big three probably aren't the capitals you'd think, but the big three were Brisbane, Adelaide and Perth. They roared along last year, particularly the Perth market and the Brisbane market and Adelaide. Sydney was a solid year last year, and Melbourne's been an underperformer. And I think the underperformance of Melbourne, given that its other factors are still pretty positive, sort of alert us to perhaps that's an opportunist market going forward. I think there's continuing good value in that Melbourne market, given that it's interesting when we look at the position of the Melbourne median versus the Sydney median. It's actually now at a 10-year low versus the Sydney median. So it's sort of screaming out opportunity. And, the Melbourne economy is doing okay. It's still the engine room for new home development, Melbourne, of all the capitals. And I think it just lacks a bit of confidence, Jason. I think when we're talking about 2025, particularly now, the big question mark is, will the RBA move on rates?
Have you got a call tonight for us? It's probably, we all hope it's going to happen this year sometime. The earlier, the better for most people's mind. But, where are you sitting?
Well, I think the narrative has really changed from the RBA over the last few months, Jason. They were pretty dogmatic that, they had to get to their inflation target range and had to be sustainable. And then they'd sort of think about moving rates downwards. But lately they've sort of said, well, perhaps they're going to be happy if they feel that the inflation rate is moving towards the target range. I guess they're sort of setting us up to justify a rate cut earlier rather than later in 2025, because there's no doubt that the inflation rate that they measure, which is the underlying inflation rate, has been moving towards the target range. And the question is whether it's sustainable. But I don't think it's a done deal, a cut in rates. I get the feeling the Reserve Bank would sort of like to cut rates, if I could say that. But there's still a lot of mixed messages out there, particularly in regard to Australia's economy, which is still very, very strong.
Yes.
We had
employment's still quite high, right? So the unemployment's low and employment's high. So that's one of the things to watch out for.
That's right. And our unemployment rate just ticked up a little bit over November to 4%, but it's still very, very low historically. That's exactly the same as it was the year before, and also the same as it was during the very strong economic period of the mining boom in the mid-noughties. And so historically, it's a very low unemployment number. But the real standout has been the growth in jobs. We've been creating really hundreds of thousands of new jobs over the past couple of years, and it's quite a remarkable statistic. And the other point is that we've got a very high participation level from our population in the actual workforce. So it's not as though people are leaving the workforce. They're actually coming into the workforce in record numbers in terms of proportion. So it really doesn't get any better than that. And my point is, look, that's really good news. But it's not good news for lower interest rates from the economic point of view, because typically you'd see interest rates falling when the economy needed some help, But I guess the problem the Reserve Bank has is they don't want to cut interest rates and then create even more demand for labour. And, employers can't cover the wages, so they have to put up their prices, and that means higher inflation. So there's a number of factors out there. Our economy is still going very strong. Of course, inflation is still above the target level, but it has been, reasonably adamant that once it starts moving sustainably towards the target level, that's when it would consider cutting rates. And really, it has been doing that. So the argument is, certainly the argument has been fulfilled that it is moving there. So we shouldn't be surprised. Now, it's a judgment call from the Reserve Bank. Now, the other thing I'll just mention in regard to interest rates is that, and I know they're not directly influenced by other countries, but the US have clearly stated that lower interest rates are off the agenda for the time being, because they cut interest rates by 1.5% last year.
Yeah, very quickly.
Wow. Now they were a lot higher than us, their interest rates, but they've got the same sort of environment. Their economy is very strong. They've just had a massive figure for growth over 2024, their economic growth, their GDP. Their labour market is still firing on all cylinders, but they've actually seen inflation starting to pick up a little bit. So they're a little concerned. Maybe they went too early with lower interest rates, but they're certainly saying now that they're just going to really wait and see going forward. Now, that might influence, the Reserve Bank's decision. So it's really line ball. But if the Reserve Bank, could clearly say, well, we are moving sustainably towards our target range, in our opinion, they would say. So we'll give, a modest rate cut, but let everybody know that if things start to look a little the other way, we're happy to raise rates again. I think it's a close-ish call, and it depends what sort of emphasis you put on the various factors. But I'm sure a lot of people would not be surprised if we got an interest rate cut in just 2 weeks' time, which is when they have their next meeting.
That'd be nice for a lot of people, I'm quite sure. But, if that did happen, or, at some point in 2025, we've got some of the highest median house prices across the major cities, ever. Do you see that, giving the markets a bit of a boost and kicking on? The gap between, the average Aussie affording the loan and buying a property and et cetera, is still pretty big. What's the kind of moving parts there that, positive or negative for us?
Oh, I think it's a positive, absolutely, Jason. Yeah. There's no doubt that following 2 years of strongish growth overall, markets are just starting to run out of puff a little bit. You can't keep, adding an extra $100,000 to your loan without either a lower interest rate or a higher income. I think even though buyers are still quite active out there, we're not seeing the price growth in some of the big movers, particularly Sydney, that we have, because they just don't have that capacity to pay or to borrow more. Now, of course, if we get lower interest rates, that just acts to refuel our housing markets because it gives buyers the capacity to borrow more. And there are still plenty of buyers around. And of course, with confidence high in most capitals, particularly given our strong economic performance, it doesn't take much for that refueling to start to bring the buyers that have perhaps been pushed out by higher prices back into the marketplace, And I think that might be just the sort of confidence factor that Melbourne needs at the moment, just to get it kicking along. But there's no doubt that those big three that I mentioned, Perth, Adelaide and Brisbane, particularly Brisbane and Perth, are still set, I believe, for maybe another double-figure growth in house prices this year. So that would only be sort of accentuated by a cut in interest rates. So it's probably just, if we did get a cut in rates, it's just what the sort of cycle needs, as it is running out of puff, it gets that refueling from lower interest rates. Even though it's 0.25%, I think, we've still got plenty of appetite out there for property in Australia. No surprise, really. And that would be really kicked along by a rate cut if and when it comes.
Yeah, no, that's good. That's good to hear. And, rate cut, elections, sometimes people sort of sit around on the fence for a while, waiting for something to happen. So, that.
Well, the other factor that I want to be a little bit diplomatic about is we do have an election this year. So there's nothing more the government would like than a cut in interest rates. So maybe they're whispering in the ear of the Reserve Bank, well, maybe it's time to cut, guys. But I won't say that, but you know what I mean? It's another factor. And I think in terms of the overall housing market activity, I think the government, wouldn't be surprised if the government provided some more kick-alongs to demand in sort of the housing market. And what we saw with that, it's sort of a longer bow, is that the electricity handout that they gave last year has certainly been a significant factor in falling inflation. Now, that's a sort of a one-off. Maybe they'd be tempted to do that again, just to, really knock inflation on the head. So I wouldn't be surprised if the government had a lot of nice little handouts for us on the way up to that election.
By a few votes on the election. I mean, some of the state governments, up in the ante when it comes to first home buyers grants, and Victoria doing the stamp duty concession again. So, there is some interesting, maybe temporary, but beneficial to the property market. So what are the other things tonight? The last couple of minutes here, Dr. Andrew, what are we going to dive a bit deeper into tonight? So make sure all of the members get along. We're going to hear from you tonight in detail about what you think is important to understand for the next 6-12 months in the property market.
Well, we'll look at what the growth figures have been for the last couple of years. We've seen a big catch up, as I said, with those Brisbane, Perth and Adelaide catching up to Melbourne, and it's been quite remarkable. We'll also look in a bit more depth at those factors regarding the prospect of an interest rate cut and the performance of all those factors, so we can get a bit more of a feel for whether the Reserve Bank would move, and also understand what we need to be looking at in terms of the outlook for inflation and interest rates. We've got the latest home price data for January. So that's hot off the press. So be able to see what the capital cities have done over January. And I guess most importantly, we've actually got the latest auction results from the weekend. Now, I think it's really an opportune time to be doing the show tonight, because it is the first real auction week of the year. It's just finished. So the numbers are robust enough to get a feel for what's happening. So we can see how really has the year started off this year, reflecting on those very latest auction results. So we'll look at that in some depth. And just to finish off, we'll have my fearless predictions for house price growth in all the capital cities for 2025.
Well, listen, folks, if you're listening in, Dr. Andrews pretty well hit the nail on the head every single time. So if you want to back a horse that's a winner, you've got to get along tonight and find out what those predictions are. Well, listen, thanks for joining us this morning. A little bit of a quick update and a quick conversation about what's on the menu for tonight. But as always, thank you for your time, and awesome. Looking forward to tonight, a bit of a deeper dive.
Thanks, Jason.
See you tonight. All right. That's it, folks. Thank you, Dr. Andrew. Well, listen, I know a bunch of you have got some questions in the chat, and, Jeff is concerned about, hey, what's going to go on with the tariffs, jobs, exports, imports, whatever. I'm sure Dr. Andrew will have a few pontifications or opinions on a bit of that tonight as well. So, folks, make sure you get along to the mentoring and coaching program. This is where we get the best of the best for you to let you know what you should be thinking about and how to make the right decisions for your property portfolio. So that's it from us tonight, folks. Great to have you here on the show. See you tonight, Alison, for sure. Chris, looking forward to it, mate. That's it from us, folks. Thanks for joining. As always, we'll be back on tomorrow for another Wealth Coffee Chat. So if you're around, love to have you on as well. But tonight is the big show with Dr. Andrew. Don't miss it. All right, that's it, folks. Take care. Bye for now.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the Six Star team here at positivementor.com.au.
Thanks, mate. Well,